Hello friends, welcome to Shreyan's Study. We welcome you to this course on TDS Under GST. In this module, we'll cover the introduction and main objectives of this GST provision. TDS stands for Tax Deducted at Source. As per Section 51 of the GST Act, 2017, the government is empowered to mandate the deduction of TDS under GST by certain categories of deductors. The government brought TDS under GST into effect from 1 October 2018, Wide Notification No. 50/2018. As per this notification and under Section 51, the TDS is to be recovered at the rate of 2% on the payment being released for contracts of goods and services where the value exceeds 2.5 lakhs rupees. The very objective of introducing TDS under GST is unique. Unlike TDS under income tax, TDS under GST is not a revenue for the government. This element of recovery is introduced to keep track of whether the amount of GST collected by the vendors is being properly remitted to the government. If you have not subscribed to our channel yet, then do subscribe to our channel. Share the video widely, and if you enjoyed it, don't forget to like it. Without further late, let's move on to our video. Entities authorized to deduct TDS under GST. The following persons or entities are authorized to deduct TDS at the rate of 2%, 1% CGST plus 1% SGST or UTGST, or 2% IGST, on payments made to a supplier where the total value of taxable supply under a contract exceeds 2.5 lakhs rupees, excluding GST. Explicitly listed in Section 51(1) of GST Act. Department or establishment of the central government or state government. Local authority. Governmental agencies. Notified persons under Section 51(1)(d). The following categories of persons were notified by the government. Wide Notification Number 50/2018 Central Tax, and are also required to deduct TDS. Authority or board or any other body set up by an Act of Parliament or a state legislature, or established by any government with 51% or more participation by way of equity or control to carry out any function. Society established by the central government, state government, or a local authority, and registered under the Societies Registration Act, 1860. Public sector undertakings. TDS under GST is not required to be deducted in the following circumstances. 1. Recipient is not an authorized deductor. If the supply is made to a person other than the entities authorized to deduct TDS under GST, as discussed previously. 2. Supply between authorized deductors. If the supply of goods or services takes place between any of the authorized TDS deductors themselves, example, central government departments supplying to APSU. This exemption was notified by Notification No. 73/2018 Central Tax. 3. Supply of exempted goods or services. If the supply consists only of exempted goods or services, or items outside the purview of GST, example alcohol, petrol. 4. Contract value limit. If the value of the contract for the supply of taxable goods or services is less than or equal to 2.5 lakhs rupees, excluding GST. 5. Interstate UT supply with different pay location. This is the most complex exception, relating to the interplay of three locations: supplier, place of supply consignee, and recipient pair. TDS is not required if the location of the supplier and the place of supply, consignee's location, are in a state or union territory that is different from the state or union territory of the registration of the recipient, the paying authority. Simplified example. Supplier, vendor Maharashtra. Place of supply, consignee Maharashtra. Recipient, paying authority Karnataka. In this scenario, since the recipient is in a different state from the supplier and place of supply, TDS is not recovered. The application of TDS under GST, as per Section 51 of the GST Act and the relevant notifications, depends on three main conditions: the value of the contract, the nature of the supply, taxable exempted, and the location of the parties involved. 1. Value check, the primary filter. Is the total value of taxable supply under a single contract more than 2.5 lakhs rupees, excluding GST? If no, TDS is not to be recovered. If yes, proceed to the location check, Step 2. 2. Location check, the interstate exemption. This step checks the proviso to Section 51(1) of the GST Act, which exempts certain interstate transactions. This rule involves three locations: supplier's location, loss, place of supply, POS, and recipient's state of registration, LOR. Is the state of the supplier, loss, and the place of supply, POS, the same? If no, it's an interstate supply where IGST is charged. Proceed to the recipient check, Step 2.1. If yes, it's an intrastate supply where CGST plus SGST is charged. TDS is required to be recovered, assuming the recipient is an authorized deductor. 2.1 Recipient check, the key exemption. The official exemption states, no deduction shall be made if the location of the supplier and the place of supply is in a state or union territory, which is different from the state or, as the case may be, union territory of registration of the recipient. 1. Scenario A. Loss and POS are in different states, interstate supply. The rule is TDS is required unless the locations, loss and POS, are different from the recipient's state of registration, LOR. Example, TDS required. Supplier, Karnataka. Place of supply, Maharashtra. Recipient, Maharashtra. The recipient's state is not different from the place of supply. TDS is deducted. Scenario B. Loss and POS are the same state, but different from recipient's state. Example, TDS not required, the exception. Supplier, Maharashtra. Place of supply, Maharashtra. Recipient, Karnataka. The common state, Maharashtra, is different from the recipient's state, Karnataka. TDS is not deducted. This module is the method of calculating TDS under GST. Let us try to understand this with an illustration. There is a contract of worth rupees 5 lakhs for supplying of taxable goods under GST. Assuming the transaction is an interstate transaction and the rate of IGST applicable is 18%. The total value of contract is 5,90,000 rupees. Here the TDS at 2% is required to be calculated and the value of supply of taxable goods before applying the GST. In the instant case, the TDS is required to be calculated on rupees 5 lakhs, that is rupees 10,000 only, to be recovered towards the TDS. Let us see the calculation method of TDS in case of contracts where the combination of taxable and non-taxable supply is existing. In case of a contract which includes both taxable and non-taxable supply, the TDS under GST is required to be recovered only on the portion of taxable supply subject to the fulfillment of other conditions. In the instant illustration, the taxable component of the supply is less than or equal to 2.5 lakhs rupees. TDS is not to be deducted, even if the total value of the contract exceeds that threshold. The method for recovering and accounting for the 2% TDS under GST depends entirely on the nature of the transaction. Intrastate intra-union territory transaction. For intrastate or intra-union territory transactions, the vendor, supplier, claims CGST and SGST, or UTGST, in the tax invoice. The 2% TDS is similarly split and recovered, 1% towards the CGST component and 1% towards the SGST or UTGST component. Interstate transaction. For interstate transactions, the vendor claims IGST in the tax invoice. The 2% TDS is recovered and accounted for entirely as 2% towards the IGST component. In this module, different situations are discussed for better understanding of TDS recovery under GST. For example, if a contract of value rupees 10 lakhs is placed and a claim for a part payment or milestone payment of 2 lakhs rupees is received. The question is whether TDS to be recovered as the contract is more than 2.5 lakh or not to be recovered as the payment being made is less than 2.5 lakh. In this situation, TDS is to be recovered since the value of contract is more than 2.5 lakh. Let us see another situation where core contracts were placed in favor of one vendor in a particular financial year. The value of each contract is rupees 2 lakhs and as such the total value of all contracts is rupees 8 lakhs. Now the question is when payments pertaining to these contracts are released to this vendor, whether TDS is to be recovered or not. In this situation, since the value of each contract is less than 2.5 lakh and TDS is not be recovered. As such, it is to understand that the TDS under GST is neither payment-specific nor the vendor-specific. It is solely a contract-specific. In recovering TDS, the date of invoice is crucial. For example, if a contract of value rupees 10 lakhs is placed prior to 1st October 2018, that is the date on which TDS under GST has become effective and a milestone payment is claimed by the vendor by his invoice dated beyond 1st October 2018, then in such case the TDS is required to be recovered. However, if the invoice is raised before 1st October 2018 but the payment is being released after 1st October 2018, in such cases recovery of TDS is not applicable. In short, the date of invoice is the criteria for recovery of TDS irrespective of date of conclusion of the contract. Now let us see a situation where the value of contract is revised. Subsequently, the government organization entered into a contract worth rupees 2 lakhs with a supplier ABC during the year 2020. First milestone payment for 1 lakh rupees was released on 15th October 2020. While making this payment, the TDS under GST was not recovered since the value of the contract is less than 2.5 lakh. Subsequently, the organization has revised the value of the contract to rupees 6 lakhs from 2 lakhs. How to deal with this situation? In such cases, the TDS is applicable on the entire value of the contract, irrespective of the fact that some portion of the payment was already released. Hence, TDS is required to be recovered on the entire value of the contract in the subsequent payments. In this portion, let us check the provision for TDS specific to defense establishments. One defense unit in Bangalore procure goods with Rs 8 lakhs from a supplier ABC, located in Mysore during May 2022. The entire payment 8 lakhs rupees was made to the vendor by the unit directly on receipt of the bill in Controller's Office for post-audit. It was noticed that TDS under GST was not recovered by the unit while releasing the payment. The same was placed under objection by the CDA. What remedial action can be initiated by the defense unit? The remedy is that defense establishments are exempted from recovering the TDS under GST. Ministry of Finance by Notification Number 57/2018 exempts the units and establishments under Ministry of Defense from the provisions of Section 51 of the Act. The authority specified Annexure A is the complete list of principal controllers and controllers of Defense Accounts Department offices who are authorized to recover TDS under GST when the payments are processed in their respective offices. The copy of the gadget is supplied as a part of the resources of this course. In this segment of the course, the provisions on remittance filing and refund are discussed. The authorized deductors are responsible for paying the amount of TDS recovered in a particular month to the government through the GST portal within 10 days after the end of that month. As step 2, start the data containing the details of the TDS deducted such as GST of the deduct total amount and TDS amount, whether it be central, state or integrated, is required to be uploaded on the portal. The challan with unique CPIN, that is called Common Portal Identification Number, need to be generated for the total amount of the TDS deducted against the CPIN. The amount of TDS is to be paid to through the portal by appropriate channel of payment. In case of delayed payment, an interest at the rate of 18% on the TDS amount shall be liable to be paid. After the payment of the filing of return in Form GSTR 7 is also to be completed within 10 days after the end of that month, failing which a late fee of Rs100 per day subject to a maximum of Rs5,000 shall be liable to be paid. Having completed the filing process, the deductor is also responsible for furnishing the deductee a certificate in the form of GSTR 7 or within 5 days from the date of crediting the amount to the government, failing which a late fee of Rs100 per day subject to a maximum of Rs5,000 shall be liable to be paid. There is a provision for claiming the refund of TDS amount credited to the government by the deductee. In case of excess amount credited on the portal erroneously, the same can be claimed as a refund in the electronic ledger by filing an amendment to the original return. However, if the amount is already added, the electronic ledger of the supplier refund cannot be claimed by the deductors. The format of GST 7 that is the certificate of deduction to be issued to the supplier after making the payment on the portal by the deductors is displayed here for reference. With that, I conclude this video. Thank you.